What's up, guys? Welcome back to another video. This video right here has been getting a lot of traction. A lot of people been viewing this video, and I've been getting a lot of questions and some comments of people saying that they've watched the video and at the end of the day they didn't really understand what this rule is and blah blah blah, and some other people saying, oh, it's a crappy rule just for prop firm to have more restrictions on you and stuff like that. And I just want to quickly do a clarification on this video, and I want to re-explain the rule and in a better way so you can understand it, especially with these last few days with Mr. Trump dumping and dumping and dumping the price down or pumping it up. Doesn't matter. This rule works both way if the price is pumping or dumping that 5% or 7%. And there's a lot of questions about, oh, the price limit is at 5% to 2% 7%. There's a lot of percentages that goes around that the prop firm likes to mention or throw out there, and some people still don't understand what's the 2% is, what's the 5%, what's the 7%, and they get so confused by this price limit rule. So the first thing I want to clarify is that this rule is not a prop firm rule. This rule is actually by the CME data group, and it's applied for any American product that is traded on the stock market, and that includes, of course, Nasdaq, gold, S&P 500, Russell, YM, and all of that other stuff. And as you can see here is from the CME group website, they have a price limit for the S&P 500 since it's an indice, and you can read this on your own if you would like. And if you don't, I'm here to tell you that this is not just another rule that prop firms like to put, but actually it's coming from the actual product, which is the CME group. It's coming from the actual futures market, because this is a future market, it's regulated product, so they don't want you to be gambling while the price is dumping or pumping more than the average price range that it should be moving in, which is actually makes very much sense, because during these markets, these volatile markets, the price moves really aggressively, and the 1 minute candle, like for example, if I go to the 1 minute right here, and this is the same example that I'm showing you on the 5 minute. I just went to the 5 minute because I wanted to include all of the data that I can. So for example, this candle alone is $50. This other candle alone dumped $70, and right away a candle right after it 104. So let's say, for example, you're on the 1 minute time frame and you saw, oh wow, look at this beautiful inversion fair value gap or whatever, right? And you want to take this trade, the entry right there, stop loss right there, $84 of stop loss. I don't think anyone would trade with $84 of a stop loss. Same thing here. I don't think if anyone would take this trade. It's a beautiful setup, by the way. Take the entry there, stop loss right here or below this wick, which is 117, and this is 171. So anyway, this is my point that I want to make. During this volatile market, the price moves really crazy and the volatility is through the roof. The price can move in any direction with $100, $50, or $200 recently in 1 minute candles. And we all saw those amazing days on Monday the 7th of April and the 8th of April, and the price or the market has been dumping every single day consecutively now and reaching 5%, 5%, 5%. And what is 5% exactly? And I'm here to tell you what's the allowable price range movement that you can trade is 5%. How do you measure that? Get your measurement tool right here, the price range. You'll find it right here in that long and short position tools box. You'll find it right here, price range. And where you gonna put it is right here, where the market starts opening a new session. So as you know, this right here, this day, this previous day, price kept playing, and it closes at 5 p.m. It opens back up at 6 p.m. EST. All of those times are in EST, New York time. So opens back up at 6 p.m. and this is basically pre-Asian session. Pre-Asia session opens at 6 p.m. So what you're going to need to do is position your price range tool from the open of that 6 p.m. pre-Asia, which is basically a new start of the day, and you position it, you click on it from the open and you go down 5%. So there you go. This is your 5% allowable range, an allowable trading range that you can take trades in this area however you want. But as you can see, once the price opened at 9:30 a.m. or market open, it kind of pumped up and then pumped down right away and getting out of that 5% range. So if you were right here, from that 5%, if you drag it 2 more percent, that would make it 7%. So here it's how everything is adding up. You hear a lot of 2%, 5%, 7% from the prop firms and a lot of people talking online, but where these percentages coming from are from here. This is the initial 5%. This is the allowable trading range. You can just write it here. From the 0 to the 5%, you can trade it. Anything from the 5% down, you cannot trade. Whether it's a 2%, 7%, however many percentage you want. The golden information that you want from this range is that 5%. From 0 to 5, this is allowable. Anything more than that, just turn the computer off and get off the screen. You don't need to be watching the market. For your information, if the price would trade below that 7%, the price in live action, it will hold itself. It will not be trading and it will not allow anyone to trade automatically because it's American pair again. It will not allow anyone to trade for 15 minutes. It will hold its price and then it will open somewhere else. I don't know if it will open from the same close or somewhere else. I don't know, to be honest. I never seen anything like that, but that's what I got from the rules and the CME data. That's pretty much how the 5%, 7%, and the 2% comes in play. And this works if you are pumping or dumping, if the price is extended to the upside, or for this example, it's extended to the downside. It will work either way, but you will just go to the opposite direction from the same exact point where it closed at 6 p.m. or opened in this case, where it opened. Look right here. This is the previous day. This is the session, New York lunch and PM session. You come down. This is the market close, and it kind of hold itself closed for 5 minutes, open back up again at 6 p.m. EST. And from this point, and you drag it up to the 5 point, if it would have pumped up. So 5 point, that's your allowable range. Anything above that, turn the computer off and get off the screen. That's pretty much it. It's pretty easy to understand. I don't get how people don't really understand this rule. Last thing I want to mention is if you enjoyed this video, if you understand and you got helpful information from this video, please drop a like on the video, subscribe to the channel if you're not already yet. And if you happen to blow your account accidentally in the past couple days, that has been crazy in the market, MyFundedFuture and Tradeify got you covered. They're pretty good. MyFundedFuture here, they're doing weekly promotions, and the weekly promotion for this week and it will expire on April 14th. And please take advantage of this really good deal. This is the Starter Plus accounts, and I did a comparison between this Starter Plus account and Tradeify Growth account. I did a comparison for it. I will link that in the top right corner of the screen if you're interested into figuring out which of the prop firms have the better 50k or 100k or 50k account, the better account or the better value for your buck. Because as you can see here, guys, MyFundedFuture is running 25% off for their starter plus account for any user. If you're an active or existing user, you will get 25% off, and here are the new prices for that promotion. This again will end on the April 14th, and please, if you would like to support me, you'll find an affiliation link down in the description below, or you can use my coupon code Kemo to automatically apply the greatest and the best discount that is currently available at any time. And coming down to Tradeify, they're being great. They're really good prop firm. They have really good accounts, and I did review them. I have which they only have two types of accounts that I recommend: the growth account and straight to funded accounts. If you're not a fan of straight to funded because they're a bit pricey, I would suggest the growth account. And again, you can click on the top right corner of the screen to watch this comparison between the growth account and the starter plus account to find out which of the accounts has the better rules for you as a trader. And here are the prices. Again, Tradeify, they're running 30% off on all of their accounts, and if you are a new user to Tradeify, you will be getting 40% instead of 30. So that's why you see two prices. This is the 30 and this is the 40% applied. And to get those prices, you can find the link down in the description below, and once you put it in your checkout and you're ready to check out, you can put code SPRING and it will automatically apply the discount for you. Again, if you would like to support me, you can use the link down in the description below. I did a really good comparison between the growth and the starter plus account that really sums all the rules together to find out which is the better pick for you. And lastly, they still have their straight to funded account. A lot of people been taking advantage of this because those percentages, that 30 and 40% discounts, they're not running them too often, especially on the straight to funded accounts. So if you would like to take advantage of that, I did also review that straight to funded account. You can watch the link on the top right corner of the screen. It's really good account. I really recommend it if you're just tired of the evaluations account. And that's pretty much it, guys, about this video. I am really hoping that the price kind of gets back on track. I also have been doing a lot of the weekly analysis videos, and we have been getting the analysis video or the prediction on point. I've been making weekly analysis video every single week that drops on Saturday of every week, and we've been killing it, man. I tell you where I expect the market should be going, and as you can see right now, I'm expecting it to go up after getting to the 0.5. But anyway, that's just a sneak peek. But if you're interested into hearing a different opinion of a bigger time frame analysis weekly, you can watch those videos that drops on Saturday of every week. That's pretty much it about this video, guys. Thank you so much for watching till the end. Make sure to drop a like and subscribe to the channel if you are not already yet. Thank you so much for watching. I'll see you in the next one. Peace.